You know, we always like to call you in the big days, and today is a big day, although for all the wrong reasons. We are seeing a huge sell-off across Asia, whether that's stocks, currencies, crypto, gold, oil, everything is down. What is going on? This is the end of days.
Well, I think, let's focus on the Philippines. We're a bystander here. I think what we really saw was really flight to safety, and I guess the winner is the 10-year U.S. Treasury. So from probably four and a quarter last week, it's now 3.75. So we had a risk-off event. And the question is, will the Fed really cut rates sooner than later, right? So again, the other factor is that the Japanese central bank raised rates by 15 basis points, and that also created an appreciation on the Japanese yen that caused a sell-off in Japanese stock. So they were actually two events that came in together that created the sell-off. And I think what probably has already transpired in the U.S. market of more than 3 days of selling, hopefully we could see some bargain hunting. And this is what a lot of analysts would like to say, that there could at least be a dead cat bounce, so to speak.
Okay.
And for us in the Philippines, tomorrow is an inflation number, and come Thursday is the GDP number. So hopefully that should spark some bargain hunting for us. But if there's no let off from the selling that's happening in Europe and in the US, then we expect the market to probably again retest the lows of 6.4.
Well, a lot of analysts and traders, Jonas, are saying that they actually expected this volatility to come in on the back of the U.S. jobs report, on the back of a hawkish BOJ or Bank of Japan. What are your thoughts? And for those investors here in the Philippines, what mindset should they take? Kalma lang ba?
Well, I think for those that have who are taking a long-term view and probably have not been in the market for quite some time, this is actually an opportunity to look at potential stocks that are already giving potential 6 to around 7% in terms of dividend yields, especially those big blue chip companies that offer dividends. And to a certain extent, the REITs that were issued then, that were doing 3 to 4%, might be in the 6.5 to 7.5%. So these are actually potential bargain hunts investors can take. But these are actually for those who have not been invested. For those who are already invested, let me put it this way. Do you like catching a falling knife? So unless you are an expert, the best way to do it is allow the knife to fall at this point in time, and probably wait a bit at this point in time.
And with regards to those invested in the Philippine Stock Exchange, the PSE, it was down over 2% today. Do you think it will go down lower for all the sale or bargain hunters out there? Should they buy now?
Well, the risk, I think the risk at this point in time is a break of 6.4. I've been saying that the range is between 6.4 to 6.8. So we initially saw a test of the 6,400, but it held back at 6,432. So if there will be still more of the sell-off of over 400 points in Wall Street, then definitely that would be tested. But if, let's say, we see some bargain hunting, we can probably still say that we're range bound between 6.4 and 6.8. I think the critical for us is August 8 and August 15, where we expect probably the BSP to cut rates. That's positive for the market. And August 8, assuming that the second quarter GDP is 6.1%. So that's my forecast. I think the average expectations around 6%.
John, quickly, what does that mean? Sit on the sidelines for now and wait till August 8th? Wait for more data, is what you're saying?
Okay, the problem is we're in a ghost month, and typically the ghost month is I guess in one interview I had in May with you people, I said sell stocks in May and run
Oh
away.
my.
So from 6.7, we're now at around 6.4. So typically August. Okay, the reason for the major sell-offs typically, Western people are taking their summer, so
Yeah.
we here at the East are affected by their you know, profit taking from their portfolio. So it might be a good time to probably position yourselves, probably for a late, probably a fourth quarter rally. And prior to this sell-off, we've seen 12 to 15% earnings growth for some companies that have already reported their second quarter and first half earnings, so which were good. It was only capped at around 6.8 for the market, mainly because concerns over the U.S. That it is heading towards a recession with the job numbers last Friday. But if we were to take that out, it should be positive for the local market. It's just that, as again, we're an innocent bystander in the sell-off. So if you can withstand the volatility and you get to see prices closer to 6.4 or lower with the risks at 6,000, then bearing that in mind, it might be a good time to take some positions and probably be surprised of a year-end rally.